So I figured I'll just show you the process that I need to do every day, and so it takes a long time. So what we need to do is get the API imported into the sheet. That needs to be done every day. So it's a bit of a hassle, but it needs to be done. So what we need to do is we need like a cookie on your computer. So you do need to log into the myfxbook, and then what you're going to come to is the extensions app script, and we're going to trigger it. Okay, and then we're going to go to myfxbook, and then it can error, but then you just do it run again, and you can do it again, and then it does it. And then we need to do it for the signals sheet as well. Oh, this is the signals. We need to do it for the main sheet. So to think about it, say this does take a long time. We come to the live data, app script, API. And then we're going to go to the myfxbook. We're going to run. It might error. No, it doesn't. That's cool. And that's the API bit done. I'm going to come to get the American, the US Treasuries. So we can come here. We need to copy this data. It's quite laborious. Come to the. We can get rid of that now. And we're going to come to the risk calc. And I'm going to come across. So we really dropped on the technical scores. Okay. So we should see these higher because of that, because the technical, yeah, so that's good, because that makes sense. So there was a flight to safety in US Treasuries and the dollar. Okay, so what we do now, drag this into Discord. I put a little comment. US Treasuries, there we go. Yeah, as we saw, those are flights to safety. US Treasuries and USD. And we've got ECB tomorrow as well. So then what we do is come across, and we're going to copy that across. There's probably an easier way of doing this. There's got to be an easier way. There's got to be a way that we can automate this, and it'll make my life a lot easier. So I do this every single day. There's the yield curve. So that's risk off, because we should be not inverted. We need to be going up over time, not going down over time. So there's fear near term as opposed to long term. There's less fear in 30 years than there is in 3 months. So they're anticipating a risk of event, in the next 3, 6, 12 months. And the 12 months now above 5%, which it was below 5% about 72 hours ago. Yeah, 5.7, 5.5. There you go. What day was that? Okay, so it's like nearly a week ago. We were below 5% on the 12 month, and now we've really pumped above it, as you can see. So the yield curves, the yields are pumping, and it's causing it to invert more strongly. Okay, so that's that, and we can do the. So in a way, this is quite good, because we're covering the video and also demonstrating the laborious process that I need to do every day. And there's the 8.6 pump on the VIX, so that's quite risk off as well. VIX pumped. And we'll have to see how we go tomorrow. And then we're going to come to... What I'll do now is I'll pause the video, because I'm going to need to get a password for the FXCM trading station. So I'll pause the video now. Okay, I've just got the password, so I'm going to come to the FXCM. There you go. And then we can see things as I populate the data. You're able to see the difference as well. So it might be quite useful. There's the password, which obviously, you know, I like to keep protected. It's a demo account, but, you know, it's just because this is going on the internet. People want to know the password. So this market scope, that's fine. And then it's the case of getting the snapshot data into the sheet. There's the EURUSD. Now, we were looking for a long on this tomorrow, so we're going to have a really good think about how we close today. It's looking pretty damn bearish, and also I'll show you the sentiment as well on the dollar. So what I need to do is I need to see this data here. I need to populate that into the sheet. So I need to manually type it, which is a pain, but it's okay. Okay, so let's come to Wednesday night. We're going to grab that across. This is going to be a long video, but it should be quite informative. And there you go. And we're going to put in the time, and we're going to put in Aussie, and we can see the difference across time. But we're not too worried about Aussie, and we're not too worried about yen, but we're more interested about the indices. So minus 4.64. So 1.22. See, remember that the euro had flipped to sell, as I told you guys. Or have we gone back below? Yeah, sorry. Yeah, we'd gone to buy, and of course that action today, they'd actually really went bearish, but now they've gone long. So we had a big flip in the last 24 hours. That might even happen again tomorrow. So currently, as it stands, it's a sell because at the net picture level is that we're positive. We're above 50%, they're net long. So we've got a positive number. So we should be falling on that. And we have fallen as well. So let's look at France. Oh, that's bad. That's fairly risk off. No, minus 4.7. So that's getting closer to zero. So if it goes towards zero and it goes above, then it tells us that they're going to be net long. So we're seeing a reduction on France, okay? And that's fairly bearish. GU, they're long, so that's bearish. So we had a sell, see? DAX, now this is the key. Oh, hasn't really done much, which is a bit of a bummer. Hasn't really moved. Oh, I'm doing that in the wrong bit. Minus 4.53. NU 3.8. S&P. Wow. Okay. So we're getting quite close to teetering into positive territory there. Minus 5.32, which is interesting because they were net positive not long ago. UK. Okay, maybe it was like last week. Anyway, US 30 minus 199, so that's getting closer to zero. And dollar CAD minus 3.27 and 3.04, and then 4.13, and then 1.14 minus 2.58. Okay, I see gold. It's red, so it's indicating more of a sell over time. And okay, well, so we've seen a slight reduction here, and it's given us a fear view of the market. We're in the fear phase, so that's kind of strange. It's done that. I don't know why I did that. It's a bit strange, but hey ho. Yeah, so we had a big dump on the technical scores, a reduction, a worsening on the technical scores, and the fact that the herd have gone slightly, ever so slightly long. So we're actually in a state of fear, but we won't be extreme fear because of this. There's still 18 people short risk indices, okay? So until they've got wiped out, we won't see a big crash, okay? So we are in a state of fear, and that's the manual population bit done. And what I'll do is I'll pause the video now, and then because I'm going to do the indices and gold analysis, But I suppose we could actually continue to do this. It's not really a big problem, is it? So we're going to come to DAX, and then we can just mark out. So they've shorted it, which kind of makes sense. They would. It's looking quite bearish, isn't it? So see them go long here, which has happened yesterday, and we created that box. So actually, I've gone one step ahead of myself. I need to do the bulletin update. But that's fine. I can do that afterwards. So come to paint. And what we did, we drew a box yesterday, and so that's that. And now they've sold it on this candle here. So that's going to be a support box, okay? So we should be above that because they've sold. Okay, so we should be above there. That's that. So that can go into the DAX bit in Discord. And basically I've gone one step ahead of myself. I need to just do the fear. I need to populate that into Discord, which I'll do afterwards. And they have shorted, which is understandable. Yeah, eyes on ECB. to tomorrow. Yeah, so that's that. So let's do the bulletin thing, and then I just this just goes in the daily bulletin channel. It doesn't need to be. There doesn't need to be much said about it. There's them shorting the dollar as well, so that's making dollar a buy. If they sell it, it's going to make it a buy. So let's come into the daily bulletin bit. There we go. So we are in a state of fear, in a fear phase currently. The technicals scores have fallen, and they have gone ever so slightly long. Okay, so that's that bit done, and then we're just going to come back to the US 30. It doesn't matter which order it's done, as long as it gets done. And we're looking at oil as well. Now this was of note because I thought they were going to break that low, and then they were going to pump price, and it was going to be a big trap. However, we can see it's clearly wasn't a trap, and it's actually fallen quite heavily. So that's the level there. This move here was like, right, I think it's going to probably be quite bullish, and we sort of like went fairly bullish, but then you can see what happened here, and they've gone long, and they went long. If I was trading it, I would have probably gone long as well, because I'm looking at that thinking that's a trap and it's going to be quite bullish. So now what they've done, they've mirrored my thinking. Also, I say I mirrored their thinking. So it's probably a good job I wasn't trading this, because I was probably going to look for longs, knowing that that was going to be a trap, and it clearly not. And what's happened is that they showed their hands on the Dow Jones, and they've got really punished since. So there's the US 30, and it's really interesting to see them change their mind, because they were selling so heavily for so long. It's just really interesting to see them like look to buy, and the moment when they look to buy, what happens here, for example? Yeah, here, boom. Actually, you could probably argue where we can map that properly. We need to get the crossover. There. So where does it map? It maps that one, which kind of makes sense because we had the reaction candle there. And so yeah, it's really bad, isn't it? They've gone long, instantly punished. They've gone long, instantly punished. So that's the US 30. So that's different to the DAX, okay? Because the DAX, they've sold. On the US 30, they've gone long. So US 30 is more bearish. DAX, yeah. Trade carefully with this one. obviously that's going to act as a resistance because they'd gone long. So this is a punishment zone, right? And yeah, oh, I forgot to mention that one as well. Look at this one. That's just bonkers, isn't it? Instantly punished. Just really, really painful to watch. Yeah, more or less, isn't it? Could argue this one. And so that's that. So that's a very good example of the SSI indicator and mapping those punishment boxes. So that's the US Fed. Gonna do the S&P. Oh yeah, okay. And right, wow, okay. So wow, oh my god, that's crazy. So we had the big heads up about this last couple of weeks, and I said there was a change in the hive mind, and that they were looking to long here. So really, you could argue less short as well because they were short all this time, and they had to escape. They had to bail at the all-time high. They couldn't handle it anymore, and of course, this is like that less short or more long, but it's the same. It's the same thing. So it's treated exactly the same. Here's another one, and then here's another one. Oh, we've got a massive punishment box. I thought this was huge. This is much larger. So we've got to be really careful tomorrow, and we're probably going to congest in this and just be very choppy. So that's that, and then we can map that box. So you can see how the price action aligns. It's actually really accurate, and that I can't do a thing like that because that'd just be crazy. So that's a humongous punishment box. US 30. US 500, sorry, and then we're nearly done. Yeah, finally some respite for bears. Finally, it's just been such a one-way traffic. It's been ridiculous. It has been ridiculous. And I'm glad to see the two-way traffic return. And then lastly, we'll finish up with gold, and then that'll be today's video. So you can see how long it takes to do the video. It's actually quite lengthy now. So we'll just finish up with gold and we'll wrap up the video. And the robot's going fine as well. We're basically just doing sanity checks on it. So there's not much to report on there at the moment. And look at gold. And I think we'll probably have a punishment box above. So I won't wait for that to do its thing. It's been slow for some reason. Hopefully this is going to load now. Probably not. Yeah, that's fine. So let's have a look. Did we get a punishment box? Well, we had two. They've gone long twice. So let's have a look. Surprising it didn't fall more, really. Oh, look at that. That hit the level exactly. Look, that level. That's the level I marked out. Oh, we didn't get quite there. We came very, very close. So that was obviously a good level of support. And this was the trap mechanic, but it didn't come into play because what happened is that they shorted it here, and them selling it didn't mean that they needed to place the trap. It didn't need to break below because they'd sold it here. So it didn't need to fall there. So that line was an old line from an old trap, which it never came about because they'd sold it. So there was no need for price to fall. They're going to get punished if they sell it, you see. And so we have got like a punishment box here. It's likely they're probably going to sell it though, to be fair. Just below this one. It's around about here, isn't it? So we should be below this box. But we obviously got that support. And that's today's video. So it's a long video, but I just want to go through the steps that I need to do every day and hopefully understand. It's actually quite painstaking, but hopefully, you know, it's useful, and the analysis is going to prove fruitful, especially as we're turning on risk appetite as well. So be careful with risk, because we've got the ECB tomorrow, and we had quite a hawkish FOMC today, and that CPI came out as well. So be careful about buying the dip. You'll know a good time to buy the dip is when the technical scores improve here, and ideally that would be green too. But I've got a feeling what we're seeing now is that we're going to see a big reduction tomorrow evening, and we're going to be off the 18. We're probably going to be minus 17 or maybe even minus 16. So that tells us that we're going closer to zero, and that tells us that we're going close to for them to be in net long. If they go net long, we'll have it will fall. It will have like a mini crash. Okay, it won't be like like 2020 or anything like that, but we'll see a big decline because that's how the stock market works. It's to do with emotions and stuff like that. So we are in a state of fear. So be careful. Thanks for sticking by this long video, but I just want to make so you knew the processes that I need to do every day, and hopefully it's appreciated and it's useful as well. So I'll speak to you guys soon.